Hey, what's going on, everybody? Welcome back to Boss Blunt's Think Tank. Cheers, everybody. Today's video might be a little different from what some of our audience here is used to. We're definitely going to be talking about the stock market, but not so much meme stocks today. Mainly being right now because we're having some real issues on financial markets that, that cannot be explained simply by talking about precious metals and meme stocks. So we've got to delve a little bit deeper in here. This video shouldn't be too long, but we're going to delve into a lot of the problems going on right now with Joe Biden, the way that he's helping the Chinese Communist Party. We're going to be talking about student loans here, as you can see, climate policies, and the fact that China is going to expand majorly in South America. This is greatly weakening the United States of America, and it's not a good thing for any American. Take a look at this chart here. The outstanding student loan debt that we've got here in the U.S. is almost $2 trillion. It's $1,780 billion. And when you look at the GDP of other countries like Saudi Arabia and Australia and South Korea, for example, their entire GDP is less than $1.7 trillion. We've got more than that in student loan debt in the United States alone. So what we're seeing here with tuition costs and debt accumulation being at all-time highs is undeniably a looming economic crisis. It is a massive crisis that the majority of people do not understand. This requires a multitude of solutions, completely revamping the way that the education system is set up. So let's talk about that a little bit. Biden was trying to win voters by promising the passing of, student loan debt relief, but that's not realistic, honestly, for that to actually get passed through Congress. But let's take a quick peek here, and what you're seeing is tuition costs and fees of tuition have outpaced CPI, which is inflation for the consumer, by 4-1 over the last 40 years. So inflation has increased by over 194% since the 1980s, but tuition has increased by 710%. That means that 45 million Americans currently have federal student loan debt. And half of that debt belongs to people with graduate degrees, and the other half belongs to people with undergraduate degrees. Though, because they have graduates, their debt per student is significantly higher. So what happened also is that there was multiple inflationary situations going on here. The government, the Federal Reserve, printing tons of money while also running zero interest rate policies at the same time and cutting state funds for public colleges on a per student basis. Those were major issues during the period of heightened demand that we really saw. And that being the case, students really need some sort of recourse here. There's going to be massive numbers of defaults on student loans that create consequences that harm borrowers' earning potential for many years. Decline in credit scores, wage garnishments, colleges can withhold proof of attendance, bankruptcies that make it hard to get loans for over 7 years, sometimes as much as 10. So there are loans that are highly likely to default regardless of when the COVID moratorium on payments ends. And it's not looking like those loans are going to be forgiven or canceled. And that fallout of defaults en masse, particularly between low and middle income degree holders, will present a huge cost to the economy, much more so than the cost of cancellation even. It'll be even more destructive to the economy. That being said, long term, controlling the cost of higher education is extremely important. But it doesn't seem like the government here has any interest in changing this whatsoever. This is from the Reddit thread from Data is Beautiful subreddit. Absolutely fantastic place for due diligence. I frequent it quite often. Take a look here. What we're looking at here on financial markets, this is the global Dow on the weekly. And look at what we saw when you the corresponding Google Trends keyword of, quote, bull market. Back in 2009, when we saw the keywords of bull market, it was right here towards the ends of the top of the highs that we were seeing around 2,900 before it collapsed all the way down to about under 1,200. And we saw the same thing here after the 2020 COVID crash here in the bull market Google trending words from the global Dow when we were at around 3,200 and it collapsed down to 2,200. The difference is that now we're seeing some recessionary issues and there's no more ability for the Federal Reserve to continue with their zero interest rate policy. They called it ZIRP for short. That is unsustainable. It is stupid. And it was completely inflationary. When you combine that with giving trillions of dollars in loans to businesses and to the consumers that were spending it the most, low income and middle income people that were not saving that money, just pump that money back into the economy. They were directly contributing to inflation as we currently see it. And we're looking at the same thing now. Look at the Google Trends for bull market today, right here, and the global Dow, the Dow Jones, on the weekly. We're looking at a high of 4161. I can only imagine how far this can crash with the current recessionary and depressionary issues that we're seeing. Take a look at the valuations right now of the S&P 500. Forward price to earnings and trailing price to earnings are considered very expensive. This is a brand new chart that just came out from Charles Schwab. The S&P 500 5-year normalized price to earnings and price to book value ratio are considered very expensive. Price cash flow is considered expensive. Dividend yields and the Shiller Cape Index, which is the cyclically adjusted for inflation price to earnings ratio, are both considered extremely expensive. The rule of 20 and equity risk premium of 10-year Treasury yields are also expensive. The only thing that's somewhat fairly valued is the corporate bond yield reset that we just had in equity risk premium. So it's looking like something that runs opposite to the bond market, like TBT, might be. Let's put it this way: I'm not a financial advisor, and this is not financial advice, but it looks like that might be somewhat fairly valued when you consider that corporate bond yields are also somewhat fairly valued. The Fed model is considered expensive. Tobin's Q and market cap / GDP are also considered very expensive as far as the current percentile ranking relative to history overall on valuation metrics. What's up, Black Widow, Maynard? Good to see all you guys and girls. Hi, Nia. Hello, everyone. Jaina. Check out the US dollar. This is the US dollar index versus the G10 breadth. And we're seeing, I know it kind of looks like just a jumbled barcode mess there because we're looking at everything from 1995 all the way through current 2023. But what you see here in the DXY is the same extremely strong pressures on the US dollar, the DXY, that we saw right before the .com bubble bursted. And we're looking at very, very similar market breadth on the 200-day moving average and valuation of the DXY, with showing the possibility that the top may just have been in on the US dollar. If you guys would like, Diamond Hands asks if I'm going to open the think tank soon. How about this, guys? As soon as this video is over, in the next 15 minutes or so, I will go and put a link to the Discord. It's completely free. It's closed to new members now. There's several thousand people in it. But I will open it, of course, for free. I don't charge anything for it. I don't solicit you to do anything, to buy, hold, or sell any securities of any kind. but we do a lot of due diligence on the stock market, global markets, meme stocks, precious metals, etc. I'll open that up to you guys. You can feel free to join. There are some strict rules there because we keep out the FUD, we keep out the negativity, we just keep the realism in there, and really call it like we see it. That being said, I'll open that up and I'll put a link to the Discord as soon as this is over down in the comments section. But I can't do that till the video's over because the comment section's not open yet, just the live chat. So what we were discussing directly is the fact that the Biden administration is literally helping the Chinese Communist Party by restricting domestic mining. A Minnesota senator has come out and he literally said that we need to change the narrative on mining in the United States. And that was Senator Tom Bach in his appearance, what was it about? It was today, July 12th, just a few hours ago, in front of the House Ways and Means Committee. That was actually on July 10th, 2 days ago, that occurred. He testified during a field hearing in Minnesota and said that Minnesota has the largest deposits of copper, cobalt, nickel, and platinum metals and other products that are required by the renewable energy industry needs. You cannot make solar power, you cannot make electric vehicles without a lot of these items. Same thing for Highcroft Mining Corporation out of Nevada, has one of the world's largest and one of the United States' largest mines owned by HYMC, which is partially owned by AMC Theaters and Eric Sprott of Sprott Physical Silver Trust. They have some of the largest deposits of silver and gold that they're currently just beginning to mine, and they are of greater quality and quantity than expected and ever previously expected. So Mr. Bach, the senator from Minnesota, said that the United States could be a net exporter of these items: copper, cobalt, nickel, platinum, silver. But new state controls that have been implemented by Joe Biden restrict exports of germanium and gallium. And these elements are used in producing high-performance computer chips. This will absolutely disrupt supply chains. This is bad for Minnesota. It's bad for the entire United States of America. And frankly, he even said it's bad for the world. And Bach added that the Biden administration has severely hobbled the mining industry in the United States, leaving the CCP, China, with a monopoly on the mining of these products. He says it's urgent that we stop putting up roadblocks to domestic mineral production because our ability to avoid devastating supply chain disruptions and build a greener future depends on it, he said, referring to the Duluth complex in the northeast tip of the state near Lake Superior in Minnesota. He said that mining has been a significant industry in the area for 140 years, and it could once again, with the growing interest in green technology, as the rich deposits could not only be used for domestic needs, but exported to other countries for a significant boost to our economy. Those deposits would have support generations, multiple generations of miners and families in the United States. Miners with an E. At the same time, Joe Biden last September told Americans that they would be building electric cars. He said companies have announced new investments of more than $36 billion in EV and $48 billion in batteries manufacturing in the United States. But in order for that to happen, the Biden administration needs to allow domestic mining of raw materials. And if we don't get the materials here in the States, we won't be able to compete with those countries. China's not selling us a lot of their precious metals, and we can't even mine our own because Biden is preventing that. The Biden administration directly. So in 2018, for those of you that are unaware, the Trump administration renewed leases on mining for mining companies, and in January of 2022, the Interior Department determined that Trump's decision violated a law and did not consider the U.S. Forestry Service's consent authority and failed to consider all possible environmental aspect. So they claim this is the case, and then canceled all these leases under the oversight of the Biden administration. And all mining operations in the forest have been prohibited. Anything related to mining. That is absolute nonsense. China has a long history of engaging in trade wars with the United States and other countries around the world. And we're increasingly dependent on these critical minerals, and we can't even get them, even though they're right here in the United States. So this is a big problem, and Joe Biden is directly giving the CCP a monopoly on these minerals, even though we have them right underneath our feet, right at this very moment. What the fuck do you guys think of that? Let's hear it in the comments and the live chat too. Check this out. This article from Real Clear just came out on July 9th. What we're looking at here is the fact that President Biden's trying to end the use of fossil fuels, and it's not working. They're trying to reduce the demand for oil, but only thing it's been effective at is weakening the United States and empowering China. So, assuming that there's a reduction in global carbon emissions and that it's necessary to fight climate change, which in my opinion is absolute bullshit, but I digress about that. Nonetheless, it makes little sense, environmentally speaking, economically, and strategically, to prevent the United States fossil fuel sector before sufficient sources of renewable energy with proven capacity to meet global demand can be demonstrated. And that includes discouraging financing, that includes restricting leases, that includes slowing down the issuing of permits and canceling of pipelines, which we've seen the administration do time and time again. So the IEA, which is the International Energy Agency, warned us that if the supply of oil were to transition faster than demand, with the drop in fossil fuel investment preceding a surge in clean technologies, this would lead to significantly higher oil prices, possibly for a prolonged period. On top of that, we've got OPEC that is also cutting millions of barrels of oil per day. So the warning that we got from the IEA had the advantage of being written after the war in Ukraine threatened worldwide energy supplies, which demonstrated the economic threat to the world posed by a retreat from fossil fuels prematurely. So what we're seeing now is worldwide demand for crude oil that is forecast to hit an all-time high in 2023, even though we're experiencing a bit of a global recession here that is just getting started due to the fact of the raising interest rates and in order to curb inflation, which is still running rampant in most parts of the world. China's demand, particularly, is surging, and the IEA revised upwards their forecast for growth in global oil demand, with China accounting for 60% of the global growth in 2023. And here in the United States, almost 80% of the energy consumption comes from fossil fuels. This is a fact, while only 13% comes from fossil fuels, according to the Energy Information Administration. That's after tens of billions of dollars in government spending has been put into renewables to support them, particularly wind and solar, which combined make up only 5% of our entire country's energy consumption. The so-called renewable energies that we have are insufficient, and they lack the necessary dependability to meet America's energy needs. Despite that, and despite our heavy dependence on oils and fossil fuels, over the past 20 years, emissions of carbon dioxide in the U.S. have declined by 15%, while China's have grown by 216%. And our reductions here were due in great part to an increase in the use of natural gas, which has been brought to us due to fracking. But that's an issue for another time that we can talk about. The U.S. has the ability and can produce an abundance of natural gas through fracking. So if the goal is actually to reduce the global carbon emissions, America has to use natural gas much more so and curtailing the production and spending billions on unreliable and expensive fossil fuel renewable energies just doesn't make sense. If these renewable energies were absolutely economically viable and dependable and available, the Chinese would be using them, but they're not, because fossil fuels are viable and dependable and available. Period. So most of the processing minerals that we need for electric vehicles we can get here in the United States, but the majority of the processing is actually happening in China. So the fact that we're using wind and solar and batteries for energy production and transportation requires significantly more metals, 3 times more copper, 7 times more rare earths, and 19 times more nickel, 25 times more graphite, and 42 times more lithium than getting natural gas, oil, or coal production and transported in the United States. So the whole thing, everything that you hear about green energy and solar and wind, is an absolute fallacy. It's a lie. They're pushing it specifically in order to raise their ability to make money off of these electric vehicles and metals by also restricting Americans' ability to retrieve them from the ground. The U.S. mines and processes a minor, negligible amounts of these metals, and they primarily come from Australia, China, the Congo, and Indonesia. And 60% of rare earth is mined in China. So chemical processing and the battery components and their assembly are mostly done by Chinese companies. They process 87% of rare earths, 65% of cobalt, 58% of lithium, and 40% of copper. All of this could be done here in the United States had Joe Biden and the administration not restricted domestic mining. So China is greatly benefiting from the global push toward renewable energy, as is the United States 1%. But we're not benefiting as the 99%, or should I say the 99.9% of Americans. It's only the top 0.1% that are business owners and directly related to the United States government that are actually benefiting from renewable energy, which is absolute bullshit. So when you think about the worldwide jobs related to solar energy, manufacturing, those are 68% in China, and 48% of the jobs there are related to wind power. So the 12.7 million jobs related to renewable energy, there's 5.4 million of them in China and only 0.9 million in the United States, and another 1.2 million in Europe. Again, even in renewable energy or in fossil fuels, China is the one that benefits the most. So the Biden administration has proposed spending hundreds of billions of dollars of our fucking taxpayer money towards the dependence on unreliable wind and solar power. And this is what the plan that they set forth via the Inflation Reduction Act, which is nothing of the sort. It is the absolute opposite. It is an inflationary act that they're calling the Inflation Reduction Act. It's a green energy bill that does virtually nothing to reduce inflation. And even a summary of the act by Senate Democrats states that the bill would reduce carbon emissions by roughly 40% by 2030, but not without consequences. If you use a clone of the EIA's energy model, a study by the Heritage Foundation found that reducing carbon dioxide emissions by 44% by 2030 would cause 1.2 million annual average jobs to be lost in the United States every single year, plus an aggregate GDP loss of $7.7 trillion through 2040. That'd be a loss of $87,000 per family of 4 people. The average household electricity expenses for American families would also increase by 23%, simply to replace the reliable and abundant energy sources that we have here in the United States in order for them to push their green energy policies. It makes no sense to implement policies that weaken the United States economy while again putting our access to energy at the mercy of China and other dangerous adversaries to our well-being. Check this out. China's rapidly expanding their footprint in Latin America. This is a big problem for the United States as a whole. But you will not see mainstream media talking about this. Just a few days ago, just a few weeks ago, I should say, on June 5th, the governor of Argentina greenlit a multi-purpose Chinese-operated port, and this entered the provincial legislature that same day. And they also, in Argentina, house a Chinese military-run facility operating in their provinces. So the final approval is currently underway through the national government and the Undersecretary of Ports, Waterways, and Merchant Marine to move forward. But it looks as if they're about to push this through, so therefore allowing the Chinese Communist Party affiliated companies involved in the port facility through Shanghai Chemical Industry Group to run one of the largest ports in South America. So the State Department has expressed concern over Beijing's prioritization of military-civilian fusion here, really. It's a strategy that China is using to force companies to share technology and assets with the CCP. So top U.S. military officers have only spoken very little about this right now, and they're warning that China's aggressive expansion in Latin America is not a long-term threat to U.S. interests and security. They're trying to downplay the situation, but this is happening right now. They're saying that it's not a big deal that the Chinese Communist Party is taking over every part of the world, from Africa to Europe to Australia to even South America at this point. So the People's Republic of China has expanded their ability to extract resources, establish ports, and manipulate governments through predatory investment practices. I think it was just about 9 or 10 months ago, we saw them taking over the entire port of Sri Lanka because they could no longer pay their bills. And they're using these investment practices, sorry about the phone, to build potential dual-use space facilities. They can use these as ports. They can use these as a military-civilian fusion, really, to house Chinese Communist Party weaponry and actual military personnel. So security analysts and government officials in Argentina are expressing these concerns over military and surveillance applications of China's new port being built right now in Rio Grande Tierra del Fuego, which is, Rio Grande, dirt of fire, basically, or land of fire is what it's called in Argentina. This is situated ideally near the Strait of Magellan, and a CCP port facility in Rio Grande offers direct access and control over the world's second most important shipping lane between the two Western and Eastern hemispheres. So we're looking at something very similar to Cuba, right? Cuba is a good lens for understanding how CCP projects with Latin American governments typically occur. And this project was approved a week before the Wall Street Journal published a story discussing China's Project 141 initiative. This is their blueprint for the regime for how they intend to grow a global military and logistical support network, one that was very similar to what the United States has grown. And we haven't even started talking about BRICS Plus, or the de-dollarization that's currently occurring of the US dollar. So there are some really serious issues. We know that Chinese companies acted to cut internet access in Cuba during uprisings in July of 2021. And the regime seeks the Chinese presence in order to guard itself from its very own people. Because if you guys are unaware of what's going on in Argentina, let's just say it's not pretty. It's not pretty whatsoever. Looks like my kids are waiting for me to come over and say hello. They want me to come out. They're beating on the door right now. There you go. I'm sure you guys can hear that too. Kids are like, come on, Dad. Come on. So I'm going to have to call the stream here shortly, even though it's been a pretty long stream. We're going on 40 minutes already. But I think it's been really important to discuss what's going on right here. And in case you guys are just joining the stream, well, let's just say it's not looking good for global markets. They're extremely overvalued. We're looking at the very same issues that we saw in 2008, 2009, and 2020 in terms of the trends of people Googling global bull markets and the highs that we saw currently on the global Dow for the weekly charts. Everything is overvalued on equities markets with the slight exception of corporate bond yields, which are also in grave danger when you consider everything that's going on with the yield curve inversion here in the United States and worldwide. Yield curve in Germany is at negative yields that we have not seen since, I would say the 2000 .com bubble also. These are some serious issues that when you combine them with everything else that we're seeing, show us that the bull run we're currently seeing is not a bull market. But a lot of retail investors think that it is. And that's usually when the rug gets pulled. So I'll leave you with that. Make sure you're properly hedged. Act accordingly. And in case you're here to wondering things about silver and gold, or meme stocks, let's put it this way. Silver is extremely undervalued. Gold is extremely undervalued. They are traded 97% on dark pools and over-the-counter trades by prime brokerages as central banks around the world stock up on them, as countries and central banks around the world outside of the United States load up on gold, because BRICS plus countries, Brazil, Russia, India, China, and dozens of other countries now are working on trading in their own dollar, no longer in the US dollar, and on implementing their own system to combat the SWIFT system. They're no longer going to need the SWIFT system for the United States, and coming out with their own currency, their own CBDC, central bank digital currencies, and their own currency that is backed by physical gold. That is in contrast to what we're currently seeing with the fiat in the United States, the US dollar. Even though the Federal Reserve is currently working on a CBDC, they are expecting it to be basically a digital US dollar, which is backed by absolute nothing. The petrodollar in the United States military, which if everyone de-dollarizes and sells off their bonds and treasuries, then the bond yields and the corporate bonds that we're seeing here, currently considered fairly valued, will probably no longer be fairly valued. They'll probably be undervalued if everyone is selling them off, or overvalued if they are losing value significantly. So what you're seeing now in those markets is actually quite bad and quite bearish on the global economy. Then you got to take into account real estate. A lot of people fail to realize that even though real estate is down year to date in many places, is up year to date in many places and up over the 1 year in some parts of the country, when you take a look at certain parts of the country, that's not the case. For example, Idaho, Texas, Florida, California, New Mexico, Arizona, there is a significant decrease in real estate prices ranging between 5 to 24% in various cities throughout the country. That is directly related to the sales price of real estate over the last 1 year, not including the 48 to 49% decrease in Airbnb, residential, short-term rentals, STRs. They are down around 48 to 49% in year-over-year profits in the last 12 months alone. The collapse of short-term rentals and overvalued markets, like I just mentioned, will lead to a cascade throughout the rest of the industry. The lack of supply on housing markets is only temporarily holding up real estate markets in the northern states and the southern states as well. Even though the southern states this time around, because of their significant growth from 2008 through today, are likely to see the opposite of what we saw. We're likely to see now in real estate a greater reduction in real estate values down south than we will up north. Even though I do believe that the majority of states throughout the country will lose a significant portion of real estate value over the next 12 to 24 months, much more so than we saw in the last 12 months, because this ball is just starting to roll downhill. It's like a snowball, and it's at the top of the hill, just barely going over the curve, barely going over the peak, and just starting to come down the other side. And as it comes down the hill, it starts to get larger and pick up speed. And that we have not even started to talk about commercial mortgage-backed securities and commercial real estate. Because when you take into account companies like Evergrande and Shimao Group, then you've got a real problem. Because some of you may not be aware, but Evergrande is having a lot of their land seized. So they're delivering on projects to people, and then it's getting taken away from the people after they've taken delivery, which is really quite rough. Take a look at the 10-year real rates in Germany have risen to 0.31%. That's the highest level since 2014. As Holger Japet says here, this means that automatic debt relief via negative real yields is just not working anymore. We cannot continue to do more of the same and expect a different result. That's the definition of insanity. Good old Joe Biden. Taking a look at the total public debt outstanding right now, we're looking at $32 trillion. That is a $1 trillion increase over the last 30 days. Ladies and gentlemen, the total public debt outstanding has increased by over $1 trillion, from $31.5 to $32.5 trillion in the last 30 days since the United States suspended the debt ceiling. If you think this is going to help inflation come down, you're absolutely wrong. This is going to accelerate inflation. That's why the Federal Reserve is going to raise rates again more than 2 times. They're going to have to raise rates way more than 2 more times, and they're going to maintain them higher for longer. Financial markets are absolutely fucking broken. Bank of America alone currently has $100 billion in unrealized losses. Check this out. Stanford estimates over $2.2 trillion in bank losses during stress test scenarios. This is in opposition to the Federal Reserve stating that their stress test will only equal around $500 billion in losses. This is almost 5 times as much from an outside perspective in actual bank losses during a stress test scenarios. But what you continue to hear is no big deal, right? I said here in this tweet, after all we knew about this months ago, and in any case, B of A is too big to fail. Oh, that really doesn't exist. Too big to fail just means that more money would have to be printed. We're looking at another Credit Suisse situation. If the money printer is infinite, you know what that means? Inflation is too. And that is a tax on you and I. That is something that we have to pay. The central bank of Germany is the 4th largest economy in the world, is going to need a bailout because they have bought so many bonds. Those same bonds that Schwab is telling us are fairly valued. This is not a tech crisis. This is not a banking crisis. This is a bond crisis, a central bank crisis, a fiat crisis. The translation of this is that Germany's central bank is practically insolvent. They owe more in liabilities than they have in assets, and it will need a bailout. This bailout would come from themselves. This would likely come from the central bank via money printing, so it would really be a self-bailout. And the scale of it would be so large that it would likely imperil the budget of the entire country of Germany, leading to roaring worldwide inflation throughout Europe, Germany, and around the globe during a global recession that the Biden administration continues to say is not a recession. That's absolute bullshit. U.S. banks face the same risks that brought down Silicon Valley. This is directly from the Stanford Institute for Economic Policy Research from March 21st of this year. Bank of America is nursing $100 billion in paper losses after their big bet in the bond market. This article just came out this past week. And that's more than double the cost to other U.S. lenders that channeled a flood of deposits into cash. Rehypothecations are not going to save them now. All of their securities investments combined only valued $760 billion at the end of the first quarter. And they're already looking at $100 billion in paper losses. And at the same time, Bundesbank, Germany's central bank, is going to need recapitalization to cover these bond buying losses. So you can see here, German audit office's report could make it harder for European Central Bank to carry out similar programs because their balance sheet is not sound and healthy, even though they say that their balance sheet is sound because they have substantial net equity. That's absolute nonsense. Absolute nonsense, ladies and gentlemen. Take a look at what's going on in the commercial real estate markets. Evergrande Group has delivered apartments to people that were waiting for them for years, and they have been seized by a court. This has been reported by the National Business Daily. A court in southern Guangdong Zhuhai City seized land records under the residential project on June 30th of 2023, citing records from the government's website and residents themselves. 9 months after more than 400 buyers moved in. Imagine you get your house or your apartment or condo. 400 families move into these homes. And then on July 4th, 9 months later, the government comes and takes it from you and says, you know what? Get the fuck out. This doesn't belong to you anymore. This belongs to the people that are owed money from Evergrande. The land was taken after China Construction Bank sued the housing project's developer, Evergrande, over a loan conflict, according to records of registry database Quichacha. The bank had asked the court to freeze equities of the developer, which is fully owned by Evergrande's onshore units, according to records. But of course, housing regulators, did not respond to calls. This case underscores the enduring conflict between creditors and homeowners as Evergrande faces more than 1,000 lawsuits. A lot of people don't realize this, but Evergrande has almost $1 trillion in commercial banknotes that it has sold to banks around the world. That includes J.P. Morgan Chase, Bank of America, banks in Germany, Europe, Asia, South America, Canada, everywhere. All of these banks have billions to tens of billions of dollars, or even more in some cases, in commercial bond notes of Evergrande. And that's just one of hundreds of Chinese real estate developers that are absolutely getting crushed right now. Shimao Group is on the verge of bankruptcy. Evergrande, there's 100. Just Google it for yourself. Don't take my word for it. Their default could end in domino effect bankruptcies and seizures of Chinese property management companies and the properties themselves directly from people, even after they've already moved in. 9 months, a year, doesn't matter. They can still go and take that. You already paid for it, and you're living in it. Your family is getting situated. Your kids are in school. Your wife and your work. You're working, and all of a sudden you got to go find an apartment, or you got to go live on the streets, or get a trailer, or try to find some other housing. But how are you going to do that if you already paid for a house that just got taken from you? These hundreds of billions to trillions of dollars in commercial bank paper that has been sold by Evergrande will ripple throughout these banks. And then so will the other Chinese real estate developers that are collapsing. And then the Canadian commercial real estate market and the American commercial real estate market, which is seeing over 25% vacancies to 33% vacancies or more in many office buildings throughout the country, is going to collapse the price of commercial mortgage-backed securities and residential mortgage-backed securities, therefore collapsing the price of my house and your house and their house and his house and her house, everybody's. This is not just about office buildings. This is about housing. It is extremely overvalued, and people that bought their house in the last 12 to 18 months I think, are going to feel it the most. They're going to feel it really, really harshly when they are underwater, much more so than they ever were in 2008. We do not have to have a crisis of bankruptcies in the United States for a collapse in worldwide real estate prices. That is not required. It does not matter if they're no longer giving away ninja loans. Ninja stands for no income, no job application loans, NINJA. It does not matter because the commercial market and the residential market around the world, including the commercial market here in the States, are enough to collapse the entire mortgage-backed securities sector and skyrocket credit default swaps. At the same time, the domino effect of bankruptcies in property companies throughout the world would also create trillions and trillions of dollars in losses in banks worldwide, potentially leading to domino margin calls amongst prime brokers, family offices, hedge funds, clearinghouses, and broker dealers, and that are heavily leveraged in these markets and against meme stocks and precious metals. This could potentially lead to a massive short squeeze on meme stocks like we saw with Volkswagen 30 days after the collapse of 2008. September 27th, 2008, stock market drop, S&P 500 drops 13.8%. Exactly 30 days later, around October 26th, October 27th, 2008, Volkswagen shoots up to $1,000 a share on only 16% short interest, 15% short interest with 60% ownership by Porsche. And then you've got stocks out there like AMC and GameStop. AMC, for example, is owned by 85% of the entire float that we know of is owned by retail investors. 85% of the entire float is held by around 4 million retail investors. And the short interest there is around 23% to 27%, depending on whether you look at Ortex data or Stonko tracker data. We're looking at 27% short interest data with a 1,000% cost to borrow on AMC. This is absolutely massive. And that literally takes me back to what happened with dry ships when dry ships in 2008 and whatnot went up massively, and Volkswagen ran up massively after the collapse of the stock market. Take a look at what's going on AMC. The AMC average cost to borrow is over 1,000%. The minimum cost to borrow was over 856%. The short interest on Ortex data was showing 22.5%. The minimum was at 856, the average was at 1,000, and the max was at 1,600, or 1,060 or so, actually. There was a $50 million buy and a $50 million sell on AMC today. Why did that happen? Likely because they needed to return shares or move shares from one broker dealer to another broker dealer in order to get AMC off the Reg Show Threshold Securities List. Because as of today, AMC was on the Reg Show Threshold Securities List for 12 days in a row. When it reaches 13 days in a row, it could be potentially volatile to the point of an absolute volcano in price action. That's why we saw, in my opinion, a $100 million transfer of shares. I'm sorry, a 100 million share transfer there. My apologies, a $100 million transfer of shares. $50 million sell, $50 million buy in 1 minute. And that 1 minute equaled, guess what? How much price action? 0.01 cents. That means it was traded via a dark pool through an over-the-counter trade where it barely made any difference whatsoever on the national best bid and offer. They are trying to wash AMC out of the Reg Show Threshold Securities List by moving tens of millions of shares from one broker dealer to another in order to get it off the list to reduce the cost to borrow, because shorts are fucked. Same thing is going on with precious metals like silver and gold and other meme stocks like BBIG and BBBYQ and so on. Don't even get me started on BBBYQ right now. We could get into that, but that would extend the length of this video significantly. We're at 59 minutes and 50 seconds. Make sure you're properly hedged. Act accordingly. If you ask me, if you're properly hedged in whatever way that means to you, I think you're going to do very well. But again, I'm not a financial advisor. Don't buy, sell, or hold anything just because I talked about it. Do your own due diligence. do what's best for you and your family. Fuck all what anybody else says on the internet. All I know is for me personally, well, my friends, we're going to be so fucking rich. If you guys want more information on a broker-dealer, a stock brokerage firm for retail by retail, we've got that incoming right now. We're currently in the FINRA licensure application stages. We hope to receive the licensure approvals from FINRA soon. You can go to litexchange.com for more information or to sign up to become a beta tester or to learn more about our founders program. Because we're not going to venture capitalist firms asking them for money for a portion of our company. We're going to go to retail investors with our founders program and let them know, hey, would you like to be a part of something on the ground floor? Like, for example, Fidelity or Schwab and so on. Except instead of being, big money that tries to fuck you in the ass through payment for order flow and poor execution quality, we're actually looking to avoid payment for order flow to whatever extent legally possible and go direct to lit markets, to have everything trade automatically and directly on lit markets, because that is what I would want as a retail investor. And from everybody that we've talked to so far, which has been thousands and thousands of people, probably tens of thousands, if not more at this point, that's what a majority of people want now too. I don't know what I'm paying in commissions right now through Robinhood or Webull or any of these brokers that use payment for order flow, Public, etc. I know exactly what I pay when my order is commission based, and if my order goes to lit markets, I know that I will see proper price discovery on my stocks. That being said, I wish you peace and wealth, my friends. Have yourself a great fucking day. Damn, we're gonna be so fucking rich.
Yeah, you don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. Now I'm sipping on this whiskey, got one chance and it's risky, so you can't play around. And I got my team behind me like a background. I don't never back down, picking up the slack now. Now I'm focused, keep on grinding for my stacks now. I'm feeling lost in this ocean, where's a lighthouse? I keep on swinging for the fence and I ain't strike out. And yeah, that's how I'm feeling, yeah, that's how I'm feeling now. We're not here for a long time, yeah. It's 9 to 5, it's a long grind, yeah. A ladder to success, it's a long climb, yeah. Now I'm sitting here making up for time, yeah. Man, I took so many losses that I lost count. I didn't know what I was made of, but I found out. And this life will blindside, you better look out. These haters wanna see you fall and get you took out, yeah. Cause I fell on my face, and this life is a race. I keep on checking my place. Now I'm riding for my team, you can tell by my plates. And this life just threw a hook, it caught me right in the face. But I'm getting back up, I'll do whatever it takes. I'll climb a couple of mountains, I'll swim a couple of lakes. Don't got time for the bitching, don't got time for complaints. Now you going through some shit, now tell me how does it taste? You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoked through, thinking about all the shit that I've been through. Now I'm living with my choices, I just own my mistakes. Cause I'm screaming fucking hand out, I ain't searching for breaks. But I'm barely treading water and this life is the lake. Now the pressure keeps on building as I'm raising the stakes. I ain't looking for advice, now I'm looking for space. Now I'm dealing with these losses, but I know I hate the taste. Now I'm sitting back, I'm thinking as I smoke into the face. Now it's time for these apologies, the time it's too late. So bygones be bygones, I'm on business with a tie on. So fuck a shoulder to cry on, I'ma get a hoppin' like Zion. Let's raise a glass, I'll toast that. Reminisce, we roast that. How I wrote them and ain't wrote back. I'm never flimsy, the goat's backs. I don't feel bad, no not at all. When a lot of years, write a lot of calls, a lot of birthdays without a call. Ain't got time for that, so fuck a fraud. You ain't there for me, I ain't there for you. You won't bleed for me, I won't bleed for you. All the hard times I lived through, keep moving, gotta get through. I got goals and cash I gotta get to. All these memories that I flipped through. If you can't relate, then don't judge. I'll stand my ground, I won't budge. I'm sitting back cause I burn buds. I swear to God, this life's good. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through. You don't know all the shit that I've been through, all the pain and the struggle that I lived through. Now I'm rolling up these papers that I smoke through, thinking about all the shit that I've been through.